morning. It's always good to be here. I think this is my second or third time here, and the clock at the back there is ticking, so I should really start now. It's giving me the pressure. Now, I'm going to talk a bit about Hong Kong and Greater Bay Area. I think I'll skip the first slide because I think most of you would know about Hong Kong already. Second slide, one country, two system. I think you also know about that, but in the essence of time, I'm going to skip it also. But if you want to talk about it, we could talk about it later on. Third one, actually, I've got this slide in all my presentations. Some of you might have seen it numerous times already. But I think this is very important because low tax is something that we would like to make sure that companies understand. This chart actually is followed the model a few years back. Forbes magazine, they've got this tax misery index. So what it did was just to adding up all the tax rates of different things. So this is the same. I think it shows you the philosophy of how the government sees tax. For Hong Kong, you can see is the little tiny thing in the middle of that, which is about 1/4, because we are very simple on the tax. We only tax on profit. We've got the mandatory provident fund, which is 5% from employer, 5% from employee, basically only 4 taxes over there. Comparing to, say, Singapore or Shanghai, they are taxing the business much heavier than Hong Kong. And of course, you can see also there are a few crosses down there. Those are the taxes that Hong Kong government, we do not tax. So in essence, we want you to make money in Hong Kong, and then you are keeping the money in your pocket so that you could be reinvesting on that. It's a 2-tier tax system. For the first 2 million Hong Kong dollars of profit, tax rate is 8.25%. It's a new thing because we would like to make sure that there are a lot of tech companies that they are small in nature and they are starting, so this will be helping them to grow faster. And then the regular tax rate is 16.5% after that 2 million profits. Now, Greater Bay Area, because most people know about Hong Kong already, this is a new initiative that we are not looking only on Hong Kong now. We are looking at the Greater Bay Area, which is a combination of 11 cities. In terms of size, the GDP is 1.5 trillion US dollars, is actually more than the GDP of Australia already. Australia's GDP is 1.3. Is a little bit less than Russia, which is about 1.6. So in this area only, actually, it is equivalent to the GDP of a nation already. Now, this is a comparison of Hong Kong Greater Bay Area comparing to New York, Bay Area, or San Francisco or Tokyo. Now, if you look at the third row, which is the GDP of these 4 areas, we are 1.5 trillion dollars. I mentioned earlier. If you look at New York, it's 1.6, which is more than Hong Kong, our Greater Bay Area. And for Tokyo Bay Area is 1.7. Now, this, of course, our GDP is big mainly because of the size of the land and also in terms of the population. Now, if you look at the also growth rate, which is the 4th row, the growth rate for the Hong Kong Bay Area is 7%, whereas the Tokyo is 2%, for New York Bay Area is 1%. So it means that in a few years' time, 3 or 4 years' time, actually, the total GDP of Hong Kong Greater Bay Area will be overtaken the New York Bay Area already. But of course, as I mentioned, it's only the total GDP because of the size of the land and also the size of the population. If you look at the other 2 elements, which will show you that we are looking at the potential to grow, because if we can achieve the biggest one in the next few years already, there's really no point for us to do more. Now, if you look at the per capita GDP, which is the 6th row, now our per capita is only 21,000 US dollars, whereas the one for San Francisco Bay Area is 100,000. The one for New York is 80,000. So you can see the per capita of Hong Kong Bay Area is only about 20% of the San Francisco Bay Area. or about 25% of the New York Bay Area. So it actually shows you this is the element which we are aiming to grow because we don't want to have a sizable GDP just because of the population, but rather we would like to have it in proportion with the population and the potential of it. Now, the other measure is the GDP share of tertiary industry. Now, we are at 65%. We are a very service-oriented industry. However, if you look at the other measures, the other three areas is in the 70 and 80% range. So this is also where we would like to grow, which in terms of financial services or technology, especially I think technology is very important for the shipping industry these days, especially on the greenfield area. Now, of the 11 cities, actually, now this is giving you different aspects of what are the strong or strengths of these 11 cities. Take a glimpse of it, you can see that it's very comprehensive from Hong Kong's financial services, transportation, maritime, to Shenzhen's technology, to other places, other cities which is involving in different elements, electronics or machineries or automotive, petrochemical, biopharmaceutical. So actually it's very comprehensive. Now for this, actually what we're trying to show is that there is a bit of everything for all industries. The main thing over here is about cooperation that we are leveraging on each other's strengths. For maritime specifically, of course, financial services and also ship owning is very strong in Hong Kong. At the same time, in the mainland side, we have a lot of traders and commodity, the cargo owners. And of course, technology, Shenzhen is very strong. No matter it's about the software side, for example, payment solution, different things that we've got Tencent, I think is within the top 10 global capitalization highest ranking now. And also Huawei, which is very strong on the hardware. And this not only is providing the product and services, but also about the talents, which is very important. Now, for within these 11 cities, there are 4 cities which are named or singled out on as a focus, which are Shenzhen, Guangzhou, Macau, and Hong Kong. Now, for the 2 mainland ones, they are mainly focusing on the national and to a certain extent also some international commercial side. Whereas for Hong Kong, it's focusing a lot more on financial services and also technology. And within here, also, I mentioned about more important is the per capita GDP. For Hong Kong, our per capita GDP is about $40,000 US. We are not the highest, rather Macau is the highest. I don't know whether all of you know about Macau. Macau is got very strong gaming industry, and the gaming revenue actually has taken over Las Vegas for years already. So they have a very strong gaming revenue for the city, whereas the population is very small. They are about 1/10 of the size in population in Hong Kong. So actually, per capita GDP, they are very high. They are at about 80, or they're 70,000 US per capita income. But then the main thing over here is to show that the variety of these 11 cities, because if you are the main thing is that is something for you to choose from. Is 1 country, 2 system, 3 jurisdictions, 3 currencies, and 3 duty zones. So it means that if you've got investments inside of mainland China already, you believe you've got very well understanding of the system, then you can actually go into mainland China, the 9 cities straight in there yourself. However, if you are more into the common law system, like the one in Hong Kong, or you would like to have a more vibrant and robust financial system, open system, then the Hong Kong will be your pick. And then, of course, Macau actually is more on the leisure side. So actually, then you've got your different sizes for you to choose from. And one difference of this Greater Bay Area comparing to other 3 is that the other Greater Bay Area is a very loose concept that you are just giving a name to the area. Whereas this Greater Bay Area, there is a framework agreement signed among the 11 cities, which means that we have a much frequent and regular dialogues among these 11 cities to talk about how we could cooperate rather than competing against each other. And of course, it would be naive to think that there will be no competition, because actually competition will be putting every single one of it, be aware of what's going on. But rather, instead of cutthroat competition, we are looking at things that we could work together, the different kind of strengths. So Hong Kong actually will be still focusing a lot on the financial services, maritime technology side. Earlier, the panel talked about the ship leasing and ship financing, and this will still be the main thrust behind Hong Kong. For ship leasing, actually, the Hong Kong government is looking at a tax regime. We have a work group formed to look at whether we will be able to form a tax regime for the lessors if they base their operation in Hong Kong. Now, the leasing houses, a lot of them, they put their SPV in Hong Kong already. But besides this, actually, we would like to make them to have a physical presence in Hong Kong also. Some of those lessors, actually, they are in Hong Kong already for the aircraft leasing activities. And what we are hoping to do is that they will be basing also their aircraft leasing and also ship leasing physical presence in Hong Kong. And this will be making better use of the Hong Kong financial platform and also making the availability of deals for the ship owners much more. And I mentioned about the financial platform for Hong Kong. We have actually done a lot of good works in Hong Kong. I think some of you might have heard about the word Line Long Kong. And I think, of course, it refers to New York, London, and Hong Kong, mainly because of the strengths of these three cities in the financial services. For the IPO fund raised, we have been the world's #1 for numerous years. Of course, New York, London, each one of these three cities has got the #1 for different years. What I would like to point out is that for the vibrancy of the IPO market, it means a lot in terms of the fundraising for the ship owners, no matter is debt financing, raising funds through the stock market, or by leasing. And of course, renminbi, right now, of course, renminbi is still a controlled currency, but then the application and use of it is actually getting wider and wider. For Hong Kong, actually, we used it to have, for the renminbi international trade settlement, because of the growth of the volume, actually is getting bigger and bigger, and actually over 75% of the global international trade settlement by renminbi is done in Hong Kong. So it's very substantial. And it is also because of the size of this settlement and also the size of the renminbi pool in Hong Kong. We have enough renminbi to actually provide liquidity for different products, no matter is renminbi bonds or renminbi IPO or other kind of hedging products. Those are also available in Hong Kong. Of course, renminbi is more or less pretty stable for the past decade, but then actually if you look at the trend, the volatility is growing bigger and bigger. And I think this is something that if you have renminbi in your receipt and payment, is something that you would like to pay attention to and to plan for the future. And to manage the renminbi, Hong Kong actually would be the best platform. I mentioned about the ship leasing initiatives. And besides ship leasing, actually marine insurance, I don't know whether you've got anybody working in the marine insurance side. We are reducing the tax for marine insurance also. It's reducing it from 16.5 on profit to 8.25%. And besides that, if you are if you accept reinsurance risk, actually we have another category arranged with the mainland China, that when mainland insurers, when they place overseas reinsurance overseas, Hong Kong actually would enjoy a different tier, which would make the insurance company in Hong Kong accepting more risk than before at a lower cost. So we are from the Hong Kong government. What we try to do is to help companies coming into Hong Kong. So it's a very short presentation. I hope it will give you a little taste of different things on the opportunity and also in terms of the ease of doing business in Hong Kong. And I'll be around here, and I hope that if you've got any questions, come talk to me. I've got 2 other colleagues over here in New York, Douglas and also Peter. So yes, there. So if, again, any one of these 3, talk to us. Thank you.